Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Stats Canada released December's inflation numbers this morning, showing that the country's economy continues to heat up. This comes on the heels of a report showing that the Finance Minister, Chrystia Freeland, received a report in the spring saying that Canada's inflation numbers could continue to get out of control. And this was at a time when both the Finance Department and the Bank of Canada was saying that inflation was just transitory.
Lying. You're lying!
So what I want to do today is go over not only the inflation data, but also the growing pressure on the Bank of Canada in the past few weeks to move up the pace of its interest rate hikes. Well, the bank had said that it wouldn't be raising interest rates until at the earliest April. They said this in October. There has been a growing amount of pressure on the bank to move up the timing of those rate hikes to fight this inflation that, by all accounts, is getting a little bit out of control. I then want to have a brief discussion on the likelihood that the Bank of Canada will be raising rates next Wednesday on January 26th in order to combat this inflation. We will be having an update, of course, as that announcement comes out next week. And of course, the Bank of Canada will also be releasing its monetary policy report, which, as always, will have some predictions for the Canadian real estate market in 2022. If you want to get those updates, click like and subscribe. But for now, let's get into this inflation rate. Canada's inflation rate came in at 4.8% for the month of December. While the inflation rate had stuck around 4.7% for the previous few months, it's obviously not slowing down. It's gaining more steam. In anticipation of this rising inflation, many, including the banks and the business community, have been calling for the Bank of Canada to raise interest rates. For its part, RBC recently noted that they wanted to see a rapid increase in interest rates. National Bank also wrote a letter to NBC making an open call for the Bank of Canada to raise rates on January 26, noting that although the Bank of Canada had said that it won't be raising rates until April, that promises were made to be broken. National Bank noted in their letter that it's here where promises were made to be broken, or alternatively, where forecasts were made to be revised. So RBC and National Bank both calling for rate hikes, and CIBC's Benjamin Tal in an interview just this week also noted that he would also like to see the Bank of Canada raise rates on the 26th. Although Benjamin Tal wants to see interest rates rise as of the 26th, he did note that the Bank of Canada very well might wait until early spring to raise rates as they wait to see how the economy has been affected by the Omicron shutdowns. So while many of the banks do seem to be all on board as for wanting the Bank of Canada to raise rates on the 26th.
Really?
And banks want higher borrowing costs. News at 11. A business survey also released this week shows that businesses and consumers are all expecting for inflation to remain well above 4% for the next 2 years and only go down to about 3.5% in the next 5 years. So both businesses and consumers are both expecting for inflation not to be cooling down anytime soon. And I think there's a real expectation out there that the Bank of Canada is going to be raising rates to bring this inflation and at least get it under control. The expectation isn't that they're going to be able to get it down to the 2% where it's supposed to be, but that that it's going to be around that 4% range. Finally, for their part, it was reported this week that the markets have priced in 6 rate hikes over the next year. So we could see rates go up 6 times 0.25. We could see interest rates rise by about 1.5% over the next year.
I don't like the sound of that.
And I think it's worth noting that from my part, from what I've seen from the lenders, a lot of these rate hikes are already being priced in. This time last year, I was doing refinances at 1.84, and we just looked at one yesterday at 2.74. So we are seeing 0.9% difference over the course of a year, and that's without the Bank of Canada even raising rates yet. But how likely is it that the Bank of Canada is going to be raising rates on the 26th? How likely is it that they're going to move up their timeline? Benjamin Tal noted this week, and he's right, that the Bank of Canada does have a real dilemma on its hands. On the one hand, inflation continues to grow. We're at 4.8%. On the other hand, we do have continual lockdowns, and the unemployment rate is still at 5.9%, not really what the Bank of Canada wants to see. So if they raise rates, we might be able to slow down inflation, but it'll also slow down the economy. If we keep rates low, we could see inflation spiral out of control. No one wants to see Canada in the same position as the US, as it hit an inflation rate of 7% last week, and many are calling on the Federal Reserve to raise rates and raise them quickly. As for my prediction, normally under normal times, I would say that the banks and the business community have an extremely large impact, a lot of influence on what the Bank of Canada does.
My baby gets what my baby wants.
But I think there are stronger signs and there is more at work showing that the Bank of Canada will actually wait. They'll continue their wait and see approach past January 26th. Number one, the unemployment rate is still at 5.9%, and that was December's data. That was before the Omicron lockdowns occurred throughout Canada. So we don't really know quite yet what this has done to the economy, and I don't think the Bank of Canada wants to be ahead of the curve. I don't think that they want to move too fast. At least that's what they've shown over the past couple of years, as shown by that report that we just saw released to Chrystia Freeland, showing that they knew inflation was going to keep on going. But the Bank of Canada still continues to have this wait-and-see approach, and I think that they're going to continue that. If the Federal Reserve had already raised rates, if we had pressure coming from south of the border, I would say that the bank was probably going to raise rates next week, but we don't have that pressure yet. The Federal Reserve hasn't moved yet. They're going to, and they're going to move soon, but it hasn't just yet. And finally, we're at 4.8% inflation. It's definitely not great. It's not good.
Not good. Seriously, not good.
It's something that we need to be concerned about, and it's definitely going to weigh on the minds of the Bank of Canada, but we're not at 7% yet. If the inflation data would have came out today at 6.5%, as many were expecting it to, I would say that the bank is going to move. But I think that given that we're only at 4.8%, only 4.8%, what times we live in, but given that we're only at 4.8% and not that 6, 7, 8% range, I think the bank will think that it's got at least a little bit more waiting time to assess the situation, to see what the effects of the Omicron lockdowns have had on the Canadian economy. And given that the lockdowns are expected to be easing at least in the next couple weeks, at least in the next month, and many are calling that the Omicron virus has peaked or will peak very soon, I think the Bank of Canada is going to think that they have at least a little bit more time. So while I always make it a rule never to underestimate the power of business and the power of the banks in influencing monetary policy, I think under this case, the bank has waited this long. They can wait a little bit longer. They can kick that can down the road, maybe a couple of driveways up. Not too far down the road, but I think they are going to think that they have some leeway. So my prediction for next week is that the Bank of Canada is going to continue with its current policy rate. They will not raise rates. I've been wrong before.
I don't believe it.
Sad as it is, my gut feeling is that they are going to wait a little bit longer. With that said, though, we will definitely have an update out on that interest rate and what the Bank of Canada has to say about what's coming in 2022, as we're also expecting the monetary policy report next week as well. Click like and subscribe if you want to get those updates, and thanks so much for watching.